Good afternoon and welcome this afternoon to Market Movers, another great webcast from Schwab Coaching. My name is Ben Watson. To finish up the day, there is the closing bell. We're going to finish up the day. We're going to finish up the week. And nobody I'd rather do that with than my good friend Brent Morris out there in the chat, helping out to answer your questions. And nobody in an audience that I'd rather do this with than all of you that are joining me here this afternoon. Whether you're in the live version, whether you're in the recorded version, welcome to you. Thanks for joining us to wrap up this trading day and this trading week. We, as we say it every time, it has been an interesting week, to borrow from Garrison Keillor. And as we look at the market, it's perhaps setting itself up for an interesting week next week, holiday shortened though it may be. So let's take a look. A couple of quick housekeeping items as we get started here this afternoon. Remember, today's session time, our webcast time, is 30 minutes. So it's a quick way to get you on your way for this weekend. But a couple of quick items that we need to take care of. Remember, everything we talk about simply for illustrative and educational purposes only. It is not a recommendation. It is not any kind of advice. If we talk about options, remember that options carry a high level of risk. They're not suitable for all investors. Make sure that you're aware of the characteristics and risks of standardized options before considering any option strategy. Now, we're going to be using the Thinkorswim desktop software platform, specifically the paper money version. It's a great learning environment. It's not a guarantee of future success out there in the real world, but it's a great way to practice and learn not only how to use the platform, but how to apply strategies and ideas to your portfolio. Plus, we've got lots of other resources to be able to do that. We'll talk about those a little bit later. Remember that past performance, no guarantee of future results. We're going to use technical analysis today, as well as a variety of other forms of market analysis. But remember that any one single form of technical analysis is not a great way to look at the market. None of them are guaranteed. They're all theoretical in nature. Also, investing involves risk, including the loss of principal, and just make sure that you're aware of that. Make sure that you're aware also of the risks of stop orders as we talk about those in a variety of discussions. Keep in mind that you can specify the activation price, but not the execution price. And so we're going to take a look at a couple of things today. The general trend of the market, what moved the markets this week, how portfolios might have been impacted, and we're going to see what is potentially over the horizon for this market. So I've had the opportunity over the last couple of days to start the day with the Trader Talks webcast channel, and today was no different. Started with James Boyd this morning talking about ETFs, exchange traded funds. Now, we're not going to talk about those in this discussion because we want to be able to record this webcast so that those of you that are watching at a later time frame can watch it. But one of the themes that came out of that discussion this morning was the idea that there is movement happening, not just here in the US, but around the world. And we'll take a look at that as well. So I'm going to pop over here to the Thinkorswim desktop software platform as we normally do. And as we do that, this is a good opportunity for me to click on, or to remind you to click on that subscribe button down there at the bottom of the page. That's going to keep you connected and help you stay connected to the Trader Talks webcast channel. If you click on like, that's going to help to pop this content up to others in the algorithm. But take a look at what's going on with the SPX. We'll just kind of start there and we'll go from that point. Taking a look at what's happened in the S&P over the course of the last week. We were a little bit higher last week when we came together. A little more exuberant, perhaps. VIX was down. Now VIX is up a little bit. But the market moved down over the course of this week and back down towards that 200 period moving average. And, you know, from a technical perspective, a breakout of the 200 and then coming back down off of a level of resistance, maybe around that 59.67 level or so, not at all an unexpected development in the context of this pretty solid short to intermediate term trend that the market has been on over the course of the last couple of weeks. What, however, is I think a little bit maybe more telling is the fact that the RSI, rather than staying flat, and it was looking like it was doing that yesterday, kind of staying flat here a little bit, but the RSI backing down just a little bit. So we were right at the 200 period moving average, down 2.6% on the week, though down only about 0.5%, about 0.6% today on the daily chart. Nevertheless, it was a little bit of a gap down and rally today. So what I want to do really quickly is we look at the SPX and then we'll look at the other indexes, is drop down to a shorter term time frame. Just kind of see what has happened over the course of the day. So I'm going to pop into a 5-day, 5-minute chart, and we'll just zoom in to today's market movement. And this is kind of the interesting perspective that I wanted to look at. I've got the RSI here as well. And I think this is maybe even a little bit more telling than just the candle, but the story is told by the candlestick that we see today, right? Here's the gap down to the open. We got that additional tariff implication, news and tweets and policy and stuff. Yesterday, we saw the gap down overnight, and then we see this rally. So there was some digestion of that information, and there was some buying pressure going into the close today, as was potentially to be expected. Now, what's interesting to think about, now we don't get volume indication here from the SPX because this is an index, but there wasn't, I mean, you talk about the range of this particular candle, and it wasn't a huge range. It never got over, like, really, really, truly oversold, except on that gap to the downside. And it never really got truly, truly overbought in the move back to the upside. So it was a pretty good buying move. That sets up the potential for a move higher. Doesn't guarantee it by any means. The fact that we have a higher low relative. So if we take a look at where we are, well, okay, I'm going to argue that maybe it's roughly equal to where the RSI was there. Maybe a little bit of a hidden bearish divergence here. And the reason I say that, and I didn't see this until I really brought this particular candle up here at the close, when I was looking at this before, here's kind of what we have going on. And this is one you kind of have to squint at a little bit, but this is a bit of a hidden bearish divergence. Not terribly worrisome in the context, however, given the fact that it is sitting at a major level of support. There's the potential that this goes sideways maybe. Now, the other thing to think about is this bearish divergence may simply be a function of the fact that, well, even though I'm here and Brent's here and Andrew and Gabe and everybody else, all our production staff and our reviewers and everything are here, and most importantly, all of you are here, a lot of traders weren't. A lot of traders already started to peel off for the weekend. As Ricebird said, getting the grill cleaned up for all of those activities that traditionally oftentimes happen on Memorial Day weekend. Monday's going to be closed. Both the bond market as well as the equities market going to be closed for Memorial Day. And so traders are like other human beings. There's graduations and end of school year things going on. And so lower volume. And I think that may be the reason for this bit of a bearish divergence, not terribly from a technical analysis perspective, worrisome in the context of a big break to the downside, right? Even though it seemed this morning at the outset with that gap to the downside that it maybe looked a little bit more harrowing, perhaps, than it turned out to be today. Taking a look at the NASDAQ, right, in terms of that movement, well up off of the 200-period moving average, but pretty strong move to the downside in the RSI. Gap down rally here on the NASDAQ as well. Some of those tech leaders getting hit, the Apples of the world. NVIDIA, the last of the Mag 7, Mag 6 to get to come with earnings next week. We'll talk about that in just a minute here. But that may be still dragging somewhat on the NDX, but still seeing some pretty strong performance. And the Russell 2000, seeing that move back down towards the 50-period simple moving average. That's the blue line that I've got highlighted right there. That, you know, this index is one that has not yet crossed back up above the 200-period. So not yet back up into that longer-term uptrend, but sitting back on that downward move. But a bigger, I think, objectively, gap down and a bigger, stronger rally. I want to pop into the 5-day, 5-minute on the Russell, and we can see that stronger rally. Now, that may be simply a function of kind of the next idea here, and I'm going to pop back into my yield versus the SPX So I've got this grid right here that we've talked about before. Here's the 10-year. Let me move my labels. 10 years right here. SPX is right here. So there's the 10-year yield. Here's the SPX. 10-year yield we know has been climbing, but in the last couple of days has been backing off just a little bit. That's the white line. The SPX being the S&P 500, obviously. That's coming back in. That correlation now moving back towards that -1 level, suggesting maybe a little bit more oppositional correlation. It has been kind of moving. You see where that correlation has been in that above zero up to that +1 correlation. They've been moving in kind of lockstep with one another. That doesn't necessarily always happen. If you put the zero line on here, you can see that it's relatively balanced in terms of correlated movement versus non-correlated movement between the SPX and the 10-year, the yield. So there is some movement in the yield coming back down a little bit. That's something that perhaps as we go forward is a relationship that we can talk a little bit more about, but that's having an impact on the market. And as we take a look at the VIX rallied a little bit back up to its 30-period moving average and came back down, but the VIX is substantially higher. The VIX is up, closed at that 22 handle. Yesterday, we were down into, day before, we were down into the 18 handle, so the VIX has gained a little bit of fear. Last week, we talked about it. We were down at the 17 handle. There was not a lot of fear. And if you remember what I said last week, I said, we've gone from a period of time where there was maybe too much fear to a little bit too little fear. And then, of course, over the course of this week, we've seen the move back in the downward direction. So that kind of came home to roost, not because there was, complacency, but because there was market moving news, right? We saw retail sales and we saw earnings and some other things that had an impact on the market. I want to pop back over here to our comparison on the VIX and taking a look at the VIX versus the VVIX. You remember we talked about this last week as well, and you can go back to the recording and see this. But we talked about the fact that last week when we were together, the VVIX, the volatility of the VIX was below or just at the level of the VIX. Now, over the course of this week, it has risen and it is outpacing the VIX. What that suggests is that in the near term, there is some buying activity going on in protective products on the part of largely institutions. They're the ones that drive the volatility of the VIX largely. So that would suggest perhaps that, with the market sitting at the 200-period moving average, there's some idea about adding some protection, especially maybe from a circumstantial standpoint, going into this holiday shortened week, next week, going into things like a Fed chair speaking on Sunday. In fact, Chairman Powell is going to be delivering the baccalaureate address at Princeton University, which is his alma mater, on Sunday. So that's going to give, and the reason that becomes a little bit challenging, and the reason that I think maybe why we're seeing a little bit of this spike in volatility is the fact that that there is an entire day. If he's speaking on Sunday, there's an entire day without trading for the market to sit and stew about what he says and try to digest it without the ability to rebalance positions. So it would be entirely likely that we could see some activity and the VIX rising ahead of this long weekend where there is that potential for change. And small though that potential may be, but there is that potential for change to occur without the opportunity for the market to move. And I've done this before, but I'm going to go ahead and send it again as Dale asks. So I'm going to do this. I'm just going to click right here and I'm going to share this grid. And we've got a couple of great webcasts. I'll put this out here in the chat. It's also in the description. We've got a couple of great webcasts and some short videos that talk about how to implement these scripts, these shared items. But remember, anytime we share anything like a grid or a script or a watch list or anything like that, or a study, It is for illustrative and educational purposes only, and it is not guaranteed as to time or accuracy. So keep that in mind. There it is right there. So that's one thing that's maybe leading to this slight rise in the VIX. We had some data points over the course of this last week. So what I'm going to do really quickly here is I'm going to shift over to Schwab.com. Now I'm on Schwab.com, and we've gone through this before. I'm on the research tab. I'm on U.S. markets, and then I'm on the calendar. And we're taking a look at today's events, but I want to look at economic events that have happened over the course of this last week to see what moved this market. So we saw leading indicators coming in a little bit lower, but not as low as they were expected. Nothing big came out on Tuesday, but we saw inventories a little bit lower, so that suggests not as big a draw, but again, demand. And again, that's likely ahead of Memorial Day weekend. Some outlets that report on these things reporting that this is going to be perhaps the biggest driving holiday that the U.S. has seen in probably the last 3 or 4 years. And a lot of that has to do with concerns about travel overseas and elsewhere. And so a lot more people perhaps driving. But normally, ahead of these crude oil inventories, refiners would be ramping up production. So ahead of a Memorial Day weekend, it was not at all surprising previously in previous years to see draws, pretty significant draws on inventories where they were drawing down. This was actually a build to the inventory, although a smaller build than was expected. So that suggests that even though we have a lot more people driving, that inventories were already at high levels as far as refined products. And so refiners didn't need to draw on crude oil stocks as heavily because demand has generally been down. But now going through the rest of the week, we've got things like continuing claims that were a little bit higher. We've got existing home sales that were a little bit lower, which is interesting. Existing home sales were a little bit lower, but come down to today's number in terms of new home sales. They came out. The last number that we saw, again with revisions, was at the prior revision revised it back down to 670,000. Now we're seeing 743. The expectation was 679. So new home sales were a little bit hotter than expected, even with that rising 10-year. And so that would suggest that maybe, and again, from a data standpoint, from a seasonality standpoint, this is the time of year when you start to see home sales picking up, right? The winter is done. Sunshine is coming. It's easier to go out and look. Plus, kids are done with school. So this is a time when maybe rotating to a new home is a little bit easier from a family dynamic standpoint to be able to do that. So those are some of the considerations that have happened over the course of this last week. Let's take a look at what's over the horizon for next week. In terms of economic events for next week, nothing on Monday because the markets are closed, but we've got consumer confidence. We've got durable goods and durable orders coming next week. We've got the housing price index. We've got FOMC minutes, and not that the minutes are necessarily a really market mover, but they can be if there's something in the minutes that hasn't been really discussed in the huge amount of conversation that happens around an FOMC meeting. But we're going to have all of that GDP number stuff. We're going to also have inventories in terms of energy products. But then we get into next week and the end of next week, and we're going to have kind of the end of the month wrapping up things. So PCE, which is the key Fed data point ahead of the Fed meeting in mid-June. So those are some of the things that, we kind of get into this next week. So not a huge market moving week, but it is slow. The market kind of sitting. But there's this old adage, right? That if we go back to the market here, let's pop back over here to the Thinkorswim platform and let's go back to our index grid really quick. The old adage, never sell a dull market, right? And I think, we're not that these markets have been dull, but we're kind of at that point. And I think that's where the idea was last week when the VIX was low. We're kind of in that scenario where it was a relatively dull market, not as much fear, right? And So the question is, do we see a bounce off of this 200 period moving average and see the markets overall move higher? Or do we see this continue to break below those levels and move to the downside? Now, what I want to do, I want to shift our view over to our sectors really quickly, which we've done before. And I want to take a look at our sector index grid, and then we'll kind of narrow this focus down to some individuals. So again, I've got to move these labels a little bit, but you can see what these index are labeled as. This is energy. We can see that energy is still coming off. Crude still driving this more to the downside. Materials, which is largely tied to energy. Most of those materials have some sort of petroleum impact to them. But industrials, as we talked about last week, industrials starting to see that little hook to the upside, starting to see some strength. Discretionary, and we're going to get into discretionary in just a second as we take a look at some of the earnings. But discretionary, consumer discretionary, a lot of those retailers, we saw a big move to the upside, but they have suffered this week as well. Ross Stores, TJ Maxx, Target, all seeing some pretty significant impacts. So staples, in fact, starting to maybe see a little bit more strength or a little bit more consistent strength here. Healthcare getting dragged down by some of the individual companies within the healthcare space, not necessarily rotation throughout the space, but some of the individual companies like United Healthcare seeing some impacts and seeing, again, that downward channel on healthcare. Financials, which it's interesting because financials don't necessarily have the same kind of tariff impacts in terms of supply chain and shipping and all of those things because they don't typically have hard products that they ship. But financials suffer and are impacted by currency changes. We've seen the dollar coming off a little bit. We've seen interest rates rising. And so those are going to have some impacts on the financials. They're starting to hook a little bit higher here. What I think is really kind of interesting is in both infotech and communication services, we're starting to see those little hooks on the right-hand side of that 50-period moving average be a little bit stronger, a little bit more of a bull flag type of move. Same thing with utilities, which is consistent with the interest rate coming down. Real estate hasn't yet realized that, but we might see that with those new home sales numbers coming out. So starting to look in some of these infotech spaces, I'm going to drop down into the infotech. This is the information technology, the technology space. This is where the Mag 7 lives and breathes generally, the Mag 6, depending on how you look at it. But that possibility, and this looks obviously like it's mirroring the NASDAQ somewhat, but kind of seeing that space here, that potential for a bounce. And we look at the next one, which is communication services. We see that that's holding up relatively strongly here at that horizontal level in terms of this sector index. So now let's go to our single grid and let's start taking a look at some of the individual stocks within this space. So let's take a look at VZ, Verizon. And Verizon kind of winding itself up. I thought this was kind of an interesting technical pattern as I looked at this. So let me take some of these lines off of here that I've had from previous discussions. And what I happen to notice on Verizon, let me get off of the text note here and onto my trend line tool, is if we start drawing these lines, we can go all the way back here. We got a big fat symmetrical triangle going on in Verizon as kind of the proxy for communication services across the board. And you can see that the RSI kind of sitting right in the middle. This is coming right to the apex of this symmetrical triangle. It's getting close to the apex of the triangle. It's very close, kind of coalescing right around the midpoint of this triangle, about that 53 level. So it's oscillated up, it's oscillated down. We've had an earnings announcement in the middle of this, and it's getting down to that point. So the reason I bring this up, and the reason I think this is an interesting pattern, is think about this. Some of you may be having barbecues over this weekend for, to get together with family, which is a great way to enjoy this weekend. And I'm going to be cautious in what I say in terms of celebrating. But some of you might have watermelon at your barbecue. And what this reminds me of is that perspective, right? That sometimes you squeeze a watermelon seed at the barbecue in between your thumb and your forefinger, and you don't know which way it's going to go. But if you squeeze it hard enough, like you squeeze this stock price between support and resistance, it's going to go someplace. And sometimes it squirts out and it goes off in a harmless direction. Sometimes it squirts out and it hits your Uncle Steve in the eye, and everybody laughs and you get a big chuckle out of it. And sometimes it squirts back and it hits you in the eye. So you got to be careful of that. Same thing here in a situation like this where you've got support and resistance that are confluent on one another, that this becomes an area where price could move one direction or the other, either the upside or to the downside. So you got to be aware of that. And so that's why looking at things like technical analysis is an important part of putting some perspective to this. I love it, TM. It's seedless. I love that. That's great. So let's take a look at a couple of other individual stocks here. AAPL, Apple getting hit with the news that there might be additional tariffs impacting Apple if they don't onshore manufacturing. And we see that move back down to the support level. So looking at this from a technical analysis perspective, the line becomes relatively clear here. We've got, let me grab my magic marker. We'll kind of draw through this. We've got a rally up and a pullback and a rally up and a pullback. And we're sitting right at that potential for a double top. But the thing about it is, if we understand technical analysis and we understand the symmetrical aspects of technical analysis, that puts us with that possibility of seeing that move back down to some of those support levels, or if it bounces, a move back up to that level as a potential resistance. So there is that possibility of movement one way or another. So we're at that point, right, where possible movement happens. Now, the pattern that kind of displayed itself here, that double top, kind of looks like arches. So I wanted to look at this one really quickly as we go into the weekend. MCD, McDonald's. Let me clear that annotation so that we can see that, because McDonald's has been in the consumer space and in the restaurant space has been backing down from this little bit of a resistance level, but it's kind of sitting at the middle portion of that channel looking for the possibility of a bounce. All right. And as we start to see that possibility of a bounce, again, that symmetrical movement could take it out to a previous resistance. But the overall trend has been moving higher. The other trend that I wanted to look at here is one that maybe is setting itself up for as we go into this weekend and as we get towards summer and things are starting to grow, and that is this one, Deere. Deere rallied up. It's pulling back to this support level. So from a technical price pattern, I wanted to look at this a little bit and see that diagonal downtrend line, looking for a possible break of that diagonal downtrend line as an entry into a bull flag. And we've got some great webcasts that talk about those. So looking over the horizon next week, remember, we are going to be, the markets are going to be closed on Monday. We are going to be dark on Monday. You've always got the calendar here on the Market Watch tab to give you a sense of what is going on over the horizon as well. You've got the calendar here on schwab.com. But speaking of calendars, you can come right here to the schwab.com/coaching website, and you can go to the calendar for live webcasts, and you can see what's coming up over the course of the next week and month. And you can also go to the Trader Talks webcast channel, and you can search. So this is a great resource. If you've got time over the weekend, you want to get away from Uncle Steve because you made him mad when you hit him in the eye with the watermelon seed at the barbecue, come find your computer, plunk down here, start searching for something that you want to learn a little bit more about and extend your learning. Now, one other thing I'm going to mention is if you come back over here to the schwab.com/coaching page and you go to in-person events. Now, there we go. I'm back. Sorry, I stepped on my microphone cable. Sorry about that. We back? We're back. Okay. All right. So this one's happening in the shadow of one of my favorite places in the world. Not a recommendation, but Disneyland coming up. And then we're going to be in Miami. And so if you have the opportunity to join us in Miami, we're going to be at the Market Drive in Miami on June 13th. We're going to be at the Market Drive in New York on June 28th. We would love to see you all there at those events. Please register for those events and come and join us out there around the country. We would love to have you be with us and continue to learn. I just want to say this for all of you that have joined us, and my thanks to Brent Moores and to our great production staff that have helped out and everybody that's helping to review this. But I wanted to say most of all, thank you to all of you for spending some time with us and for closing out the week with Market Movers and for being here in all of the webcasts over the course of this last week and back again next week. And I wanted to say this, and I said that, I wanted to be cautious in the way that I spoke about Memorial Day. It's not one of those have a happy Memorial Day holidays. You don't say that because of the nature of this particular holiday. So I'm going to say this: have a memorable Memorial Day. I hope that your Memorial Day is memorable. I hope that it is meaningful for you. I hope that you have an opportunity to celebrate those who have given the ultimate sacrifice, and for those in your family who have passed on, and you have that opportunity to spend some quality time with your family. And I just wanted to end with this, with a speech that I memorized a long, long time ago, and just the relevant part of that. Many of you know that I was a high school speech and debate coach, and this is part of that, just being the student of language that I am. But this is the last lines of the Gettysburg Address, and I think it's especially meaningful at this time of year, and I think it's especially meaningful now, given all of the things that have happened. That very simply these words: that from these honored dead we take increased devotion to that cause for which they gave their last full measure of devotion. That we here highly resolve that these dead shall not have died in vain. That this nation under God shall have a new birth of freedom. That the government of the people, by the people, and for the people shall not perish from the earth. Thank you all for being here. Thank you for being part of our audience and part of our Schwab family. Have a great weekend and a memorable, meaningful Memorial Day. Take care, everybody. Bye-bye.